This episode was recorded back in March 2022. Hello and welcome to the Metal Pack Pod, the industry's leading podcast for the global metal packaging industry. The Metal Pack Pod is brought to you by the Metal Packager, the number one digital resource for the global metal packaging market. With over 6,000 users in over 130 countries per month, be sure to check us out on metalpackager.com. I'm your host, Alex Faldham, and joining me today is Mark Smyth, author of research company Smithers' new report on the future of metal packaging and coatings. In the podcast, Mark explains the findings of Smithers' recent report, The Future of Metal Packaging and Coatings to 2027. A friend of the show, having been a guest in 2021, we discuss the latest findings from the report and examine the key variables involved as we move forward into the post-pandemic can-making world. We also have a 10% discount code for listeners wishing to purchase the report. They just need to enter the discount code in capital letters, MP27REP, to place their order. This is valid until 30th of June 2022. In the episode footnotes, we'll also include the discount code, just in case you didn't quite catch that first time round. Before we begin the episode, we must give special mention to our sponsors, PPG. We're really proud to partner with you and thank you for supporting the Metal Pack Pod over these coming months. Their range of innovative and sustainable solutions enable its customers to protect and beautify the world. Now on to today's show. Afternoon, Mark. Thanks for joining me. How are you?
Hi, Alex. Good to see you.
Absolutely. Yeah, likewise. Hopefully it won't be too long before we can meet up face to face. Yeah, no, it's been a while. So, thank you very much for joining me. I mean, it's great opportunity to discuss Smithers' latest report. I know, we've seen the press releases that have come out recently, so we're very much looking forward to getting a bit of information and finding out how the industry is changing. I mean, we've got the issues such as supply chain issues. We've got obviously the COVID-19 pandemic still very much hanging over us, and the war in Ukraine. So there's plenty to be getting stuck into here. But first of all, I'd like to keep things relatively straightforward. I mean, can you just perhaps provide just a general overview of the themes of the report for our audience?
Okay, so the report was a team effort with the Smithers team going through all the data that's available worldwide and looking at metal packaging and what in fact happens as a result of the pandemic in 2020. So last time around, we didn't have it. It was pre-pandemic. And then the outcome and looking at the changes in metal packaging world as regards the growth, development, sustainability, and also now we have climate change coming to the fore in terms of the actions that we need to take, that everyone needs to take. All of this is in the report.
No, that's fantastic. I mean, one thing I was interested in was saying about 2.9% growth within the industry up to 2027. I had a podcast with Mark Koch of Vice President of Carnal Metal Box yesterday, and for obvious reasons, they were very much positive about the future of the industry. I mean, it just struck me as the fact that there's only 3% growth, that perhaps things will stall a little bit up to 2027. I was surprised that perhaps the overriding positivity that we have seen within the industry, I was expecting perhaps the growth figures to be a little bit higher. I mean, what's your take on things? Do you think these are reflective of perhaps solid growth within the industry, or do you just think it's because of the last couple of years where we've seen real explosive growth that things perhaps will naturally slow down due to external factors?
No, I think the first thing is metal packaging historically, if you look at it over the last 20, 25 years, historically it was 1% to 2% growth, and we thrived on that. And keep in mind that the growth values we're using are value, not volume. So there's a difference there. And then the other thing to keep in mind is that we're looking at actual values in terms of history and then constant values going forward. So it's always been the case that metal packaging has had somewhat less growth than alternatives such as plastic and paper. The difference is actually not that great. So this time around, Smithers in a separate report have done a complete review of all packaging and the global packaging market in 2022 is worth over $1 trillion. And we estimate metal packaging to be 127 billion. So that's just over 12% by value. When we look at value growth overall, then you have to keep in mind that we're looking at multiple markets. So beverage can, food can, aerosol, general line can, and then we have metal closures, drums and barrels, bulk packaging, other aluminium packaging. So it's the whole of metal packaging is 2.9%. So a better read of it is to look at the report and see we have it all broken out by category. So in terms of the growth position is flat for very large packaging, like bulk metal packaging, which was hit very strongly by the pandemic because that's dependent on export, going all the way up to beverage can, which is 5%. So beverage can is 5% going forward and to 27. And then the overall mix is the 2.9% that you referred to. So it's all very detailed analysis that's gone into this. We've looked at this in every possible direction. So company reports, trade statistics, and taken a common sense view. So I firmly believe that the values we have are completely credible and solid. And 2.9% it's a forecast. Of course, it can be higher. The other aspect of it is don't lose sight of the fact that we went through the pandemic and there we had a surprise. The surprise was that we had forecast that metal packaging would see a contraction of about $4.5 billion. It did not. It saw an overall growth of $5 billion. So we saw the surprise factor there was food can increasing 8.8% overall globally. Beverage can continue with its growth. Some of the other sectors contracted, but overall $5 billion growth in 1 year. And that is more than 3 times what one would expect if we look at the 12% share of overall packaging. So the performance of metal packaging was very good in the pandemic. And then now as we come through it, there is going to be a correction. So that's the outcome is that we see that it's a 2.9%. And that is a forecast. Of course, it could be 3, could be 4%, but it's never going to be high single-digit growth value.
Yeah, definitely the common sense take. Do you think there's been a bit of hyperbole within the industry about the fact how well the industry is doing, and you almost have to separate the beverage can growth, particularly with the new greenfield facilities that we're seeing in North America, for instance, and almost have to, if we take a step back and look at metal packaging as a whole, then, yeah, you're talking the beverage can sector, we've seen tremendous growth. But if you're looking at metal packaging, then perhaps we have to take a bit more of a level view across the board if you're looking at it from sector to sector.
Well, metal packaging is performing very well. Beverage can is performing extremely well. And we see that in growth in everywhere, every region. There are other forms of metal packaging. So it would be wrong to say that drums and barrels is flat because there are new lines going in, but it's not the same dynamic as beverage can. Drums and barrels and bulk metal packaging, it's a case of maintenance and replacement and looking at footprint. And let's not lose sight of the fact that those industries are largely servicing export trade is what it's about. And we've all suffered strongly in the lack of or the constraint of export trade. So it's not really surprising. And then the other side of it, the fact is that historically plastic has had a higher growth factor than metal, and that is still the case. But what we're seeing is a change, some changes in the use of packaging and a preference for metal packaging in new products coming through. And that's all about beverage can growth. So the growth motor in metal packaging is without doubt beverage can, and it is everywhere.
We now have a quick break to check in with our friends at PPG. As sponsors of the Metal Pack Pod for 2022, we're delighted to have support from one of the industry's leading coatings and specialty material suppliers within the industry. Here's a little snippet from the latest at PPG.
Experience the iSense family of specialty coatings. PPG iSense Specialty Over Varnishes help beverage brands stand out on the shelf with unique effects. A tactile finish with a dynamic effect you can see and touch. A velvety, deep matte finish. A satiny smooth, medium gloss over varnish. A white base coat that makes colors pop. A bottle can and cup over varnish that enables special shapes. And a luxurious finish that shimmers and shines. Proven performance, possibilities. Learn more at www.packagingcoatings.com/iSense.
Can you just provide some context? Because, certainly myself, I'm probably guilty of this. I mean, as a metal packaging professional, often inward looking, and we concentrate on our own industry. So, have you got any statistics for us with regards to, say, the plastics or glass industry and what their annual growth rate is up until 2027?
I don't. You'd have to buy the other global report. What I can say is that the plastic industry overall growth in value terms is increasing at a rate higher than metal packaging. And container glass packaging is growing at a rate lower than overall, so worldwide, than what we see for metal packaging. And there again, within that, you'll see a spread. So the best thing would be to buy Smithers Global Packaging Report to have detail on that. So you'll see a spread. And glass will have less growth than metal overall on a worldwide basis. And plastic has got a growth level that is somewhat higher. That's where we're at.
Thanks very much for that. I mean, you mentioned the Smithers Metal Packaging Report. Can you just summarise perhaps some of the other trends that we are seeing within the industry currently?
The biggest thing that we're faced with is packaging waste directives everywhere. So changes in packaging waste legislation coming through, which affects all packaging, including metal packaging. And it's not just the UK or Europe, it is also the US. So you have the legislation coming through in California and Oregon, which has implications as to how we tackle packaging waste and what that means. It's going to mean additional cost and additional effort to improve our position. The position is very good, but we are faced with a number of changes in legislation coming through, and that is immediate. That is this year and next year. And then the other big thing is climate change, and we had the conference and the UN development goals for 2030 and net zero for 2050. The fact is that whether we have national government assistance, there will also be a need for industry to invest in itself in carbon neutral actions. And that has to be taken into account. So what in fact is the plan for all companies to be carbon neutral? What in fact is the plan for all companies to address packaging waste? So these are two additional factors to be considered that have come on top of the pandemic COVID challenge. So we have three challenges: recover from COVID, packaging waste, and climate change. And metal packaging is in a very good position to address all of that, but we need to be clear on how we go about that and how to avoid any unintended consequences from actions that might be taken by other materials in this whole area.
Have you got other issues such as global supply chain issues, also the elephant in the room with regards to the war in Ukraine? Obviously, your report's fairly, although fairly recent, may not still take into account some of those factors, but just anecdotally from your point of view, are they significant for the potential growth in metal packaging in the next few years?
I think actually what we have is the pandemic, which has accelerated and changed the position of the balance or equilibrium between globalization and local or regional supply. Then we have this horrible war, which is only driving the position for local or regional supply rather than globalization. We have been through 30, 40 years where the drive was for globalization in terms of supply of materials. And the US was the world's largest aluminium producer until about 2000. It's no longer the case. And so then we find ourselves with a whole range of positions that have changed, and the world in which we're in has changed, which is going to drive us to more of a local position. And the war is just one further aspect to this, that Russia is one of the world's largest producers of aluminium. The Ukraine has no packaging steel production. It imports packaging steel. Both Russia and the Ukraine had come from quite a poor position where they were growing strongly and were both attractive markets for metal packaging. And now we have a war which has turned the whole world upside down. And in addition, we have companies like Carlsberg and Heineken actually saying they are going to exit. And we have Coca-Cola and Pepsi saying they have stopped in Russia. So
you can also, sorry to interrupt, I was going to say that we can also throw in Ball Corporation into the mix with their announcement a couple of days ago to say that they, by the looks of it, under increased pressure to withdraw from Russia as well, which has certainly affected their share price yesterday. So yeah, we can also throw in some of the globalized can makers into the mix as well.
That's right. Well, I think what it is and what was true, Russia and the Ukraine were very much national markets. So if we look at metal packaging, there was and there is a metal packaging industry in both countries that was performing well and will continue to perform well. Russia is very much a national market. You do not see a lot of canned goods exported from Russia. Ukraine is exporting more. I'm talking about evidence as we go around stores and look at export values for filled goods is more evident from the Ukraine. But they're both very much national markets. So I see that Ball selling their position in Russia, it can be a very good business opportunity for someone who wants to be in that market. Well, obviously, at this point in time, it looks to be a total disaster, but that may be a fantastic business opportunity. That remains to be seen.
That's always the way, isn't it? That during times of crisis, there is often the opportunity, and we do get wrapped up in the few weeks or couple of month period that we are currently in. But if you're looking to make some money in the next few years, then I'm sure there will be someone that will take that opportunity for sure. I mean, I just want to move things forward, really. I mean, we had a recent article from one of your editors at Smithers, John Nelson, about some of the trends within the report. And he mentioned about some of the interesting innovations, such as light weighting for beverage can ends and also resealable beverage can solutions. I mean, can you just go into those trends in more detail? And do you think particularly the resealable beverage can solutions? I mean, we've talked about this issue at length, haven't we? But do you think that there is real opportunity there for real innovation and real trends to particularly take advantage of the canned water and the sparkling water market? I know we've seen Evian launch themselves into the sparkling water market, so there is real potential there. But I'd just be interested to hear your take on things.
Well, first of all, on beverage ends, the lightweighting of beverage ends is actually an interesting development in that we reckon over 2/3 of the world's beverage ends today are what we call lightweight. In 2000, that was not the case. This whole lightweight development started in the year 2000. And what the lightweight beverage end development shows and illustrates is that when you develop a new product, it will take time to spread this across your plants, your company, and the industry. So we have Crown and CDL as the main developers of that. And then more recently, we have Suzhou Slack, who have introduced a lightweight end in Asia. So historically, that was North America and Europe. Now it's Asia. So how I see it is that it will get close to complete conversion from what was the Alcoa B64 end to lightweight end. So that's the N for beverage cans. As regards resealable has been the holy grail, so to speak, of beverage can for a long time. As a result, I should say that the two examples of resealable metal beverage ends in the market today are Ball's Cap Can and Solution, both of which are multi-material. But there are potential solutions which may become part of the all-metal holy grail, that is, all-metal resealable beverage ends. And they are from Canovation, Savty, and Real, where the immediate markets are energy drinks and canned water. When we look at the market, I think it's quite useful to look at all drinks. So lay everything out: still water, carbonated water, carbonates, beer, hot drinks, alcoholic drinks, energy drinks, sports drinks. And then ask yourself the question, well, what is the position of metal in each of these markets? And then ask yourself the question, what is the main size? What are the size of containers used? And then ask yourself the question, do I need resealable? So if we look at the water market, everything is resealable. And that's because of the technology that's used for plastic bottles. That technology requires a closure, and it comes with the technology. So do you need a resealable 250 ml water bottle or 300 ml or 500 ml? No, you don't. Probably you're going to drink it in one go. But as we enter that market with a new product, such as a can, then resealable will be an advantage. So can is hardly present in the water market, and it represents a huge value proposition for metal packaging because consumers are interested in sustainable packaging. Consumers are willing to pay more for sustainable packaging. The plastic container is not sustainable as regards recycling and its recycling credentials. Metal packaging is. So this gives us an opportunity to enter with a resealable end.
And are you confident that the metal packaging market will really exploit this potential, or do you still see it as some way off?
It's got to be something new, because if we're looking at the current range of products, then these technologies have been around for some time, but nobody has pushed it forward. And now what we have is a completely different situation. We have, lo and behold, we have Danone Evian putting water in a can. That was unheard of. 5 years ago, there was no way that was going to happen. We have Perrier expanding the use of cans for water. So this is a totally different situation, which will accept metal packaging for canning water. And that was not open to us 5 years ago. So now we look at the size of the water market, massive. It is absolutely massive. So there is potential scale there to do this, which is not so evident for the existing markets of carbonated soft drinks and beer, which were well served with the existing beverage end. Why would you need a premium resealable end? So I see that the development of canning water and also energy drinks, if you look at Central Europe and Eastern Europe, the growth in energy drinks is off the scale. You can see it from all the new products that are coming into the market, and the growth rate is approaching double-digit annual growth rate for energy drinks across Central and Eastern Europe. Of course, that may now change because of the Ukraine-Russia situation. But that's where I see the development area.
No, that's some fascinating insight there. And I think you're right. I think this, particularly with the canned water market, I mean, the size of the bottle PET water market is, you're right, it's off the scale. And the metal packaging market only needs to get just a tiny piece of that market share, and it will be pretty significant, really. So it really is an interesting area, and one that I think has great potential for the industry moving forward. And I do think the ongoing sustainability message is there. So I think it's a matter of when, not if, for me personally. But just on another note, I mean, we wanted to cover the growth, particularly in North America, but particularly an interesting development last year with Vobev, with their new concept, which I just wanted to get your take on things and whether the one-size-fits-all approach, particularly with issues of supply chain issues and raw material issues that we've seen within the industry. Do you think this is something that the industry will take note of, or do you think this is more of a flash in the pan with regards to what Vobev are doing currently in the US market?
Okay, so Vobev are making their own cans and filling, and so we have a integrated operation, so to speak. And there's nothing new about this. The business challenge is how to have a profitable can-making business and profitable filling business at the same time. It's not so easy to do that. So Vobev have done it on quite a large scale. It has been put together as a profitable business solution around the world in different locations. From a can-making perspective, you have a can-making operation that is, from a business standpoint, acceptable, and the filling proposition has to fit in line with what the market takes in terms of filling and distribution costs. And that has always been a challenge. So that's why this has not really taken off, other than where you go the other extreme, where the customer makes and fills cans themselves. So people such as AB InBev do this and have been extremely successful. But it is not such an easy thing to do. What I think is interesting is to do this on a large scale, as Vobev have done. And also we see Toyo Secan doing this with American Canning in Texas on a smaller scale. So I think it's very interesting on a small scale. So the Toyo Secan example is something like 250, 300 million can capacity. So it's 250, 300 million filling capacity. It's an integrated operation. That I can see, if the numbers all work, as a very interesting development prospect, because then you have one end of the scale, the conventional approach of putting down beverage can lines, which might be 750 million to a billion can capacity that fit the current infrastructure of filling. And then at the other end of the scale, a smaller capability, which means that people who are not part of a big brand or big group can buy their cans. So the challenge in the States has been the craft brewers getting the cans, because the market in the States has been short now for 3 years. So there's a huge importation of empty cans into the US to meet the market, which we estimate is more than 12 billion for last year. So I see this as an interesting development, and it looks as though on both the small scale and large scale, integrated can making and filling can be made to work. We have to wait and see.
Absolutely. And we mentioned the US there. I mean, there's been a significant capacity expansion from both can makers and suppliers to keep up with demand. And is this, I know particularly on the beverage can side of things, but can you see this filtering through into Europe in more significant detail? I mean, we've seen Crown recently announce their decision, and I think it's going to be the largest can plant in the UK, near Northampton, I believe. So we are seeing capacity expansion in Europe and other areas as well. But do you see this trend in the US filtering through to other areas of the world?
Okay, so in the Smithers report, we go into this in quite a bit of detail. And so if we look at the 5% growth for beverage can, that is 100 billion cans additional over the next 5 years. And then if we go through Ball, Ardagh, Crown, Canpack, all their filings and publicly available reports, but it is a lot of reading, which has been condensed for you in the report. What we see is that 75% of that, more or less, is covered in the announcements that have been made by the top 4 can makers worldwide. So that covers US, Latin America, Europe, Middle East, Asia. Where we start to see a gap is in Asia, a gap meaning that since the top 4 are not so present in Asia, the capacity required will need to be met by local can makers. And so we see that. So we see that in the announcements. So you will have seen new lines going into Southeast Asia and China. So this growth is everywhere. There is no doubt about that. And the growth, and we split down the market as we described earlier. So we looked at this: water, carbonates, energy drinks, beer, everything that is a drink we looked at. And then we looked at what is happening in the market. And then we looked at the published reports from the top 4 can makers and the growth. And we see that in every region. There is growth in what one might call the core products of beverage can. So that's carbonates, beer, energy drinks, and other drinks. All core products market areas are increasing, and this is driving the increased demand. And then we have new products coming to market, which is the second source. And then potentially there's a third source of growth, which is the water we just discussed. So there's 3 sources of growth, 2 that are solid and 1 that is, let's say, right at the beginning. So it's nascent, which is the water, which it is explaining that, you know what, there really is 20 billion beverage can increase per annum required. And so that means additional lines and additional capacity. And that is everywhere. Every regional market we look at, it is there. Even Australia. So that's pretty amazing. We didn't have this 10 years ago. This has all happened in the last 5 years.
Definitely sounds like you're particularly excited for the future within the metal packaging sector, and it sounds entirely positive. I mean, yeah, if you've got any summing up opinions on just where we are as an industry, and I know it's almost been a perfect storm, hasn't it? This expansion within the industry. But do you have a note of caution at all, or is this purely a really exciting time to be in the industry and one that you haven't seen previously?
You're absolutely right. My sense of it is that this is all great. Metal packaging time is now. Our time is now. But the caution would be to keep an close eye on legislation and developments and think about unintended consequences. So what are the unintended consequences from having deposit legislation, from having extended producer responsibility? There are things that can come out of this that are not intended to happen. And we saw that in Germany in 2003, where the beverage can market went to zero overnight, and we were not prepared on the political changes on the deposit legislation in Germany. So policy is really important, and everyone in the industry, small and big, should watch this and support the trade association so we have the right lobbying to make our case and to be sure that we are not put in a position where unintended consequences occur that would work against us. And then exactly the same point on climate change, very easily be put in a position where we have to make changes that haven't been thought through properly that impact the industry. So policy and changes that will be drawn up by the policymakers are 2 very important areas to follow and make sure that we have the right amount of lobbying and the support for lobbying to make sure the metal packaging case is made. So that's my view on it.
So, Mark, thanks very much for your time. And it's just probably a nice opportunity here to end the conversation. If you could just give us a nice summary of what we've spoken about today.
Okay, thanks, Alex. So in the Smithers report, the metal packaging market worldwide is estimated to grow from $127 billion in 2022 to $147 billion by 2027 at 2020 prices, material prices, etc. That represents 2.9% annual growth. Cans, that is, all cans represent about 60% of this value, and about half of this value for cans is beverage cans, followed by food cans, other cans, and aerosols. The other 40% value of metal packaging market is metal closures, drums, bulk packaging, and other aluminium packaging. The growth forecast by metal packaging sector has a range, with beverage cans leading at around 5% annual growth all the way through to 2027, requiring an increase in capacity of about 20 billion beverage cans per year. In the first year of COVID in 2020, all packaging grew, with metal packaging taking over 1/3 of this growth, with only just 12% value share of all packaging in 2020. So metal packaging outperformed all other packaging. That said, keep in mind that overall packaging value growth outside of COVID historically has been over 3 times higher than that in 2020. So COVID-19 has had an impact, but just not in the way considered at the outset. The report covers all regions with analysis into 15 key countries and shows the USA as the leading market in metal packaging, followed by China, Japan, Brazil, and Germany. And that order is unlikely to change through to 2027. The main drivers in the market reviewed and analyzed are COVID-19, sustainability, circularity, recycling and packaging waste, downgauging, climate change, convenience, and competing alternative packaging formats. There are chapters on the demand for metal can coatings worldwide, technology developments, innovation, and the summary includes a reflection on the war in Ukraine and its impact to consider in metal packaging. Metal packaging has fantastic environmental credentials, and it is classed as permanent material. That is one that is recycled over and over again without loss of material properties. Metal's value in recycling more than outweighs its cost of recycling. It results in high recycling rates everywhere. So it is part of the circular economy, which is part of the answer to the challenges of today.
Thank you very much, Mark, and appreciate your time.
Thank you, Alex.
Thank you to Mark for sharing his busy time as always. His knowledge of the industry is second to none. It was really interesting to hear Mark's optimism for the industry. As we've spoken about in recent pods, the metal packaging industry, it really is. Our time is now. Don't forget, those interested in the report have access to a very generous 10% discount code. They just need to enter, in capital letters, MP27REP to place their order. This is valid until the 30th of June 2022. Please do like our podcast and follow us on all the various social channels. We'll be back real soon for our next episode. So you take care now. Thank you for listening.